I'm Emily Chang, and this is the best of Bloomberg Technology, where we bring you all our top interviews from the week in tech. Coming up, President Trump withdraws from the Paris Climate Accord, while leaders in tech from Tim Cook to Elon Musk speak out. Plus, Uber fires the star engineer who was once at the wheel of its self-driving car program and at the center of its bitter dispute with Waymo. Why it was time for Anthony Levandowski to go. And there's a new phone on the block. We'll hear from the COO of Essential and ask how their device stacks up against Apple and Samsung. But first, to our lead. President Trump has announced the United States will withdraw from the Paris Climate Pact and that he will seek to renegotiate the international agreement in a way that treats American workers better.
I'm willing to immediately work with Democratic leaders to either negotiate our way back into Paris under the terms that are fair to the United States and its workers, or to negotiate a new deal that protects our country and its taxpayers.
The tech industry has already responded to Trump's announcement. Tesla CEO Elon Musk taking the lead, announcing his departure from the president's council with a tweet saying, "Am departing presidential councils. Climate change is real. Leaving Paris is not good for America or the world." We spoke to Colleen Regan of the Bloomberg New Energy Finance team and Techonomy CEO David Kirkpatrick about the impact of this decision.
The gap between President Trump and Silicon Valley is a Grand Canyon at this point. But I think what's more interesting to me is the question of how committed business has become, not just Silicon Valley, but most big businesses in the United States towards climate change remediation. I mean, the issue of whether climate change is happening or not is not really controversial among most business leaders. It is accepted, as much of your reporting has already suggested. And, so clearly a lot of progress is going to still be possible even without the U.S. in the Paris Agreement, despite the fact that everyone agrees it's a stupid thing to pull us out.
Let's talk about this, Colleen. How are tech companies and broader U.S. businesses actually going to respond in action rather than words?
Great question, Emily. So we've already seen some action coming out of Silicon Valley from these tech companies. So if you look at just what's called the tech amici, so Amazon, Apple, Google, Microsoft, they got together in defense of the Clean Power Plan earlier in 2016, and we've seen them since come out and repeat again that climate change, in their view, is one of the most significant issues facing our generation globally. And they are actually putting action behind these words. So they've set all four of these companies, which represent $2.5 trillion of market cap, have all set 100% renewable energy goals. So they want to source all of their electricity from renewable energy globally. And in fact, Google came out on record as saying that they're going to hit that target in 2017. We saw Amazon be the #1 procurer of clean energy in 2016 in the United States, and Apple's even signing deals for wind farms in China in order to get clean energy for their suppliers. So they're very much behind this, and it's not just words, they're really taking action.
China,
as well.
meantime, has reiterated their
Yes.
support for the Paris Agreement. I wanted to take a look at the Bloomberg. We've got a map here of the solar plants across the country. The green shows plants that are already in operation. The yellow shows plants that are planned. How does this map change in 5 years as a result of this, or does it?
That's a great question. In some ways, I think you would expect to see that green appear even more heavily in those states in which solar is already very concentrated. We're seeing, it's important to talk about what's going on a federal level, but it's also equally important in the US to be thinking about what's happening on a state level too. So just yesterday, the California Senate passed a bill to get 100% renewable energy by 2045. That still needs to make its way through the Assembly, but there's absolutely activity going on at state level that will continue to drive wind and solar build. At the same time, we've seen costs fall dramatically, which means that it's becoming more economic to install solar in more areas of the country. So just from 2008 to 2016, we saw the cost of PV modules, which are only part of the panel, but the cost of PV modules fall by 90%. So this is helping more states to actually invest in solar as well.
Now, David, President Trump is saying he's trying to protect American jobs. On the other hand, there are concerns about jobs in clean tech, jobs in new energy. Are we ceding this potential big market opportunity to other countries like China?
Absolutely. I mean, I think it's widely believed, particularly among people who have a sort of future-centric view, which one would hope is most business people, that, you know, there is a massive long-term business opportunity in remediating climate change. It's almost like I was thinking before, if you think about what World War II did, or, you know, wars do to motivate a company or country to really gather all its energies together and make rapid progress, or look at what the Depression did to create the WPA and all the infrastructure that we created. Facing a crisis can be one of the most motivating things in the economy. And it's happening in China right now that they look at it that way, and they are really, really aggressively moving forward on remediation technologies across the board, with solar being a leading example. I want to just quickly, though, point to another thing that is really relevant to the connection between tech industry and this decision. You know, in most states where they operate, the tech companies are the #1 power consumers, because cloud centers are such a gigantic consumer of power. There was an article not long ago about even in West Virginia, the coal state, the utility there is now shutting down coal plants and putting in more renewables, partly because Microsoft and other companies are their biggest customers, and they are saying, we want renewable power.
That was Colleen Regan of Bloomberg New Energy Finance and David Kirkpatrick, CEO of Techonomy. Coming up, another wild week for Uber. The startup fires the star engineer at the center of its bitter dispute with Waymo, while its head of finance steps away from the firm. And the electric car market has been growing in fits and starts for years, but could the Chevy Bolt be the tipping point for the industry? We'll hear from one analyst literally who ripped up the car to find out. This is Bloomberg. Amazon crossed a major milestone this week. The stock traded above $1,000 a share briefly for the first time ever on Tuesday and has since hovered just below that price. The company has been wooing investors with its dominance in online commerce and cloud computing. The stock is up almost 40% from a year ago, outpacing the broader market. Meantime, some frazzled parents may get some cash back from Amazon. The tech giant will refund customers whose children made unauthorized mobile app purchases between 2011 and 2016. The Federal Trade Commission ruled that Amazon made it too easy for children to make purchases on mobile games like Candy Crush Saga. The FTC's decision ends a 3-year legal battle. The refund amount could top $70 million. It was another eventful week for Uber. The company announced its revenue increased to $3.4 billion in the first quarter, despite thousands of people deleting the ride-hailing app from their phones. They also said the company's head of finance, Gautam Gupta, will leave to take a position at another startup. But the most explosive development of the week was the sacking of Anthony Levandowski, the former head of its self-driving car efforts. He's also the man at the center of the ongoing legal battle between Uber and Alphabet's driverless car unit, Waymo. Remember, Levandowski was recruited by Uber in 2016 after a long stint at Google. Waymo then sued Uber earlier this year, alleging that Levandowski stole trade secrets and patents for the development of self-driving technology, then used them at Uber. Levandowski evoked his Fifth Amendment right not to testify, which has made it more difficult for Uber to defend itself. We spoke about this with our Bloomberg Tech's Mark Bergen and Bloomberg Tech senior executive editor, Brad Stone.
This is really about 14,000 files that were allegedly surreptitiously downloaded by Anthony Levandowski from Waymo. Judge William Alsup said that Levandowski had to turn over those files. Uber told its employee Levandowski it had to turn over those files, and he refused to comply, or he declined to comply, perhaps because something about them was incriminating. So, it's interesting. It turns what has really been a two-party case into almost a three-party case right now. We now have Waymo versus Uber, and Anthony Levandowski now off on his own.
So, Mark, how does this actually impact the case? Does this hurt Uber's case? Does this help Waymo's case?
It's really hard to see right now. I think they're waiting for whether or not this will meet the criteria the judge has set up for the injunction, right? The judge could come out and say, okay, Uber, you fired Levandowski. We don't have any evidence. He said previously that Waymo's case was pretty strong, but he said there was no quote unquote smoking gun. So it seems like, Uber's lawyers probably know what they're doing. So this might be a good outcome for them, but right now it's really unclear.
And is there any chance that Levandowski could be personally prosecuted here?
I do think that there is a criminal case proceeding. He also has a prior case that Waymo has filed against him. Prior to their February lawsuit against Uber, he's hired his own lawyers. After that lawsuit, they're criminal defense lawyers. So that's a likelihood as well.
Now, Brad, Levandowski argues that he's been forced to choose between his job and his constitutional rights. Does he have an argument there?
Well, I guess, it's unclear. I'm not a legal expert, but perhaps.
So Uber's driverless car future, what does this mean? They've already taken him off as the head of the unit. Do they really need him? Do they really need the
Well, he did
technology
become so identified with Uber and with its driverless car efforts, but there is a deep bench of talent there. You have Eric Mayhofer, who has now replaced him as the head of the driverless car division. He came from Carnegie Mellon. They have hired other folks, Raquel Uritzum, I believe, hopefully I'm not mispronouncing that, from the University of Toronto, has started an AI lab in Toronto for Uber. The risk is that the optics of this look so bad that it's going to be increasingly difficult for Uber to hire folks. And of course, talent is the name of this game right now.
So, Mark, on that note, there's a public trial on track for October. What's next here?
I do think, to Brad's point, the self-driving cars are not necessarily on the road tomorrow, right? This is still a lot experts say they're years, if not decades away. So there's a chance that Uber might turn into more of a partnership model. We see it partner with a few car makers. They might try to reach out to more car makers. It's something that Lyft has done, and of course, Lyft is also in talks with Waymo on a partnership there. So I think for this case, we'll see a lot of movement. Uber later this week. They also have the massive investigation into their harassment issues. So maybe this is a way for them to kind of put this in the back burner and deal with a lot of other cultural issues facing the company.
Yeah, and let me just add one thing. I mean, there is always the possibility that these companies settle, right? I mean, Google is an investor in Uber. There are reasons for them to work together. It does appear from a distance that this case has really been about, the founders of Alphabet, Larry Page and Sergey Brin, with a personal vendetta against one of their former employees, Anthony Levandowski. So now that he has gotten some separation from Uber, perhaps it's the beginning of Uber and Google, coming back onto the side of being allies versus adversaries.
Interesting. Now, Uber CEO Travis Kalanick got some very sad news over the weekend. His mother, Bonnie Kalanick, was killed in a horrific boating accident. His father is in serious condition, so our hearts go out to Travis at this time. I do want to ask, though, Brad, what is this? Uber has a lot of challenges on its plate right now. The sexual harassment investigation, the results of that are coming this week or next week. Are we expecting any delays?
As far as I know, no. Eric Holder, the former Attorney General, was due to deliver his report to the Uber Board of Directors. It wasn't expected that report, or at least a redacted version of it, would become public until next week. So obviously it's a terrible time for the Kalanick family and for Uber itself. I don't know how much it'll slow down the investigation, though.
Do we know anything yet about which way the investigation is leaning?
No, we know very little. Other than that, he talked to many hundreds of employees. He delayed the report at one time, asking for more time because of the response that he had gotten. I expect it's going to be tough for Uber.
And in general, in our estimation, how have all of these issues piling up impacted the Uber brand?
In the tech community, perhaps in the investment community here in San Francisco, very much so. But you step outside the bubble, you go to another city, you go to another country, and Uber is an increasing part of people's lives. Not just Uber, of course, other ride-sharing companies too. So it's this weird paradox where, yes, the brand has been hurt, hiring has probably gotten more challenging. Inside Uber, it's got to be a very difficult time, but this is a service and a company that people love and have made a bigger part of their lives.
That was Bloomberg Technology's Brad Stone and Mark Bergen. A story we are watching. It's been revealed 2 former Theranos directors did not follow up on allegations surrounding the validity of the technology used at the blood testing startup. The highly decorated former director, former U.S. Navy Admiral Gary Roughead, and former U.S. Secretary of State George Shultz said in depositions that they did not think to question the company's founder, Elizabeth Holmes, about the matter. Now, you'll remember that both men left the board in 2015 after a Wall Street Journal investigation highlighted employees' concerns about the company's operations. Coming up, Mary Meeker's annual Internet Trends Report was released this week. We will dive into what has become essentially the State of the Union for the tech industry next. This is Bloomberg. Nest Labs has finally ended an 11-month product drought. The latest gadget is a revamped high-end security camera called the Nest Cam IQ. It's the first redesigned camera since it acquired startup Dropcam in 2015. And this newest device has some tech upgrades. It shoots higher resolution 4K video that allows users to more deeply zoom into footage without losing as much clarity as the current version. And the camera lens will automatically pan to follow a person in the view as long as they walk around a room. Kleiner Perkins partner Mary Meeker unveiled her widely followed Internet Trends Report for 2015. The 355-page report covers everything from the cloud and internet advertising to wearables and music subscription services. A major takeaway from this year's report: the rise of online ads. With global internet advertising expected to pass TV in 6 months, and Google and Facebook reaping the benefits with their combined share of online ads amounting to a whopping 85% and rising. We dug into the findings with Bloomberg Intelligence U.S. Director of Research, Paul Sweeney.
We've seen the trajectory over the last 10, 12 years where we've got TV ad spending growing about 4 to 5% a year. But digital ad spending growing 15 to 20% a year. So the lines are just about to cross here this year. And I think if you look at the forecast over the next several years coming from various forecasters, continued upward trend in internet ad spending, again, double-digit growth versus television in the low single digits.
So what does it mean for everyone else if Facebook and Google are getting the lion's share of the pie?
Yeah, if I'm an advertiser or the ad agencies representing big advertisers, I'm worried because I have a market where there really is a duopoly between Facebook and Google. I only have two buyers or two platforms to allocate my ad dollars. That is not a good market structure, market dynamic. And so what we're seeing is of the incremental ad dollars that are going to the digital marketplace, again, Google and Facebook are taking just about everything. So it's really a challenge for some of the smaller platforms. Think Twitter, think Snapchat. Having 200, 300, 400 million users on your platform these days just is not enough. When you take a look at Google, you take a look at Facebook, each of Facebook's platforms is at or above 1 billion users when you think about Facebook and Instagram and Message. So it's just a tremendous reach vehicle. And what we're seeing is these big platforms like Google and Facebook are really starting to target television advertisers because that's where the money is.
Now, something else that Meeker called out is that the measurement of the impact of online ads is still very much lacking. Also, the placement of ads is sometimes rather suspect. Perhaps they might pop up next to offensive content. What do you make of some of these potential headwinds?
These are significant risks, and they're highlighted by not only advertisers, but the ad agencies that represent them. Measurement and context and placement are really the two big issues that these internet companies really have to figure out. That being said, the dollars are still going to digital. So, what's interesting, we're going to have a big data point coming out of the television industry over the next couple of weeks when they sell about 75 to 80% of their inventory in what's called the upfront market. And 18 or 19 or 20 billion dollars will be allocated to television. The expectation is that TV ad spending in the upfront will be flat to down. And again, let's think about what's happening at Facebook and Google. They're seeing their revenue, their top-line advertising revenue grow 20% plus. So you just have to compare those two markets, and you can see where advertisers are going despite some of their concerns.
Now, on a slightly different topic, she also called out Amazon and talked about how it's changing the face of retail, which we know, but Mary Meeker specifically pointed to Amazon baby wipes, Amazon batteries. These are products that Amazon is branding itself and selling to consumers. What impact is that having on the retail landscape?
It's having a big impact. I think, when you get to private branded products, it just shows you the strength of Amazon in the retail marketplace. So not only have they disrupted the entire bricks and mortar retail, but now they're really starting to think about how they position themselves within the retail market in certain verticals. So when you think about Amazon, Jeff Bezos has shown really over the last 20 years that he will make any investment that he thinks will grow his business long term, because he believes obviously that retail sales going to online will grow from today's average of about 7 to 8% to well over 10%, and he needs to be a part of that and be really the leading player there. So we've seen this company make tremendous amounts of investments across their businesses because they believe in the long-term story.
That was Bloomberg Intelligence U.S. Director of Research, Paul Sweeney. Waze is expanding its carpooling app across California. The Alphabet-owned mapping and navigation company has been testing the service here in San Francisco and in Israel, and plans to launch in Brazil. Its ride-sharing platform operates more like a traditional carpool, where the driver and passengers have similar origins and destinations, unlike Uber and Lyft, where drivers pick up and drop off riders wherever it's requested. Bloomberg's Caroline Hyde took a drive with Josh Freed, head of carpooling at Waze.
Hello.
Hello.
What a nice ride.
Thank you.
Perfect. Happy carpooling, hey?
Yeah.
How many people are using this already?
So tens of thousands of people have registered. It's a 2-app platform. So there's Waze and Waze Rider, which is our rider app. So millions of people have already downloaded Waze, and all they need to do is opt in to carpool. And then on the rider side, we had tens of thousands of people have downloaded that app. And we have thousands of carpools happening every week in the Bay Area.
Why are people using Waze already in terms of carpooling? What is the need? Is it work? Is it play?
Yeah, so we're really trying to connect commuters who are who either don't have a lot of options or are tired of driving or have limited parking at their workplace. We're connecting commuters who are going in the same direction and who have similar origins, similar destinations, their neighbors, their friends, their colleagues, and simply taking cars off the road.
And what about the money exchanging hands here? How much are you getting reimbursed for taking me? How much am I paying you?
Sure, so it's a not-for-profit share the expense carpool. These aren't actually for-profit drives like ride sharing. So you'd get, as a driver, up to 54 cents a mile, which is the federal limits on gas and expenses for driving. And the rider will pay no more than that as well. So for a 10-mile ride, it'll probably be around a $5 exchange between rider and driver, and Waze is facilitating that. So as a rider, you give us your credit card number. As a driver, you register a bank account with us, and we do the transaction behind the scenes.
Why else is Waze doing this? This is not making the money, or is it? Is it the data?
Obviously, there's a financial component in the future. Today, we're not taking any commissions on matches, but at some point, when we reach higher density and our quality of service is where we want it to be, we could take a small commission off of every match as well.
And then the data you're getting out of it, where is that of interest?
Yeah, so definitely data is important to Waze. The more people who are using Waze, the better Waze gets for everyone. So with something like Carpool, where we can tell, where your home is and where your work is and your regular sort of commute patterns, that helps us with routing for everyone. That helps us tell cities that we work with, here are your origin places of density, your destination places of density. We work with, I think, 250 different cities around the world to help them solve their traffic problems.
How does it play into the greater scheme of Alphabet as well?
At this point, we're not working, directly with any other entities on Carpool within Alphabet. It's very much a Waze project and something that we hope is important to the future of Waze.
How is the competitive landscape to a certain extent?
At this point, it's really early days. There's a few startups working on carpooling. Lyft and Uber have experimented with true carpooling models, but they haven't really stuck.
That was Joshua Freed, Waze's head of carpool business, and Bloomberg's Caroline Hyde. Coming up, the man who is the mastermind behind Android has unveiled his latest creation. We'll find out why Essential believes there's room in the market for yet another smartphone. And a reminder that all episodes of Bloomberg Tech are live streaming on Twitter. Check us out at Bloomberg Tech TV weekdays, 5 p.m. in New York, 2 p.m. in San Francisco. This is Bloomberg. Welcome back to the Best of Bloomberg Technology. I'm Emily Chang. Andy Rubin is back and betting big on a new smartphone. Earlier this week, the creator of the Android unveiled a new product from his new company, calling it the Essential phone. Essential has some serious competition with tech giants Apple and Samsung dominating the smartphone market. But Rubin believes his company and products will have the it factor to appeal to the masses. We found out from the president and COO of Essential, Niccolo De Masi.
Premium materials, craftsmanship, and passion, frankly, is what we're bringing back to the consumer electronics space. So
You don't think Apple has that?
I think there has been a little bit of incrementalism in the last few years. I think there's been a little bit of a boredom factor setting in. Your grandparents have the same devices as your grandkids as you do. We've got a very distinctive device, obviously. It's got the first ceramic titanium enclosure. We've got the biggest screen in the smallest form factor. And we've got a unique accessory port in the back, which has this, frankly, world's smallest, most amazing 360 camera that just snaps straight on the back. What I think is going to happen with our device is it's going to evolve with you. It's going to allow you to make your phone meaningfully more powerful over time. We're going to focus at Essential on only what I think is a significant innovation at all times and only significant accessories. This device, for example, we're selling for $49.99. It is not only going to democratize 360 video access, but it's something that's affordable you can bring with you at all times, and you can capture, frankly, any important moment, whether it's a sporting event, a musical event, your kid's first steps.
So you've worked at 5 mobile companies. This is your first hardware company. Let's start with the hardware. What are some custom components in the phone?
Well, it's enclosure materials. We're the only premium product that I think is using premium materials. We're not marking up our bill of materials by a factor of 3. We think we need to be a pro-consumer brand that offers our materials and our phone and all our devices, frankly, at a great value proposition. Our full display is the first rounded screen. We've got our camera notched through the middle of it. And ultimately, you can think about what we're doing in the long term of this device by looking at the back. We are using a fingerprint sensor that's on the back. We have an internal camera that's got a black and white fusion color system. And our next device will actually swallow all the edges up. So we're almost basically bezel-less at the moment. That's because of the titanium. We've got thinner edges on the device than anybody else. And frankly, it's distinctive. So I have to say we're bringing back the cool factor.
What sort of software customizations are there on top of the Android base?
We're actually going for purest, cleanest, simplest Android. So Andy's operating system's been around a while. It's obviously, I think, 85% of the market. We think that we know how to take advantage of it better than almost any other firm, if not any other firm in the market. And we're trying to, frankly, unleash the full power of the pure Android operating system.
Will third-party accessory makers be able to make things for the connector on the back?
They will in the fullness of time. I mean, it'll be a curated experience to start with, but we're big on open ecosystems. There will be a developer network around that. Our Android ecosystem play will have basically no preloaded apps. Minimal preloads is what we're going for. We think people want choice. But yeah, I think you're right. We're going to be able to turn the back into a real standard in the long term, a hardware developer network.
So the home operating system, Ambient OS, that you're also putting out, this is, the idea is to be a connected operating system for the home. The connected home has yet to take off. When will it? I mean, what do we need to get there?
That's a good question. I mean, I think Andy and I believe that the home's in about the same stage of development as the phone was in 2004 when he started Android. So we're intent in the next 5 to 10 years on building out that horizontal play. I think in developed nations, it's going to take the better part of a decade for us to go from single, really just digital appliances is what people have in the home. We're trying to build the first device to actually help you choreograph your home, automate, connect it all together. And we're doing that without being another walled garden.
So you think Android is just fine. Will you ever build your own phone OS?
We'd never say never in the long run, but in the short run, we think there's a lot that we can do to add premium hardware to a great operating system. And we feel that no one's ever done full justice to the Android operating system with the hardware. So we're a hardware business when it comes to the phone and things like our 360 camera. We're a software, hardware, full stack on the home.
So Apple is launching, as far as we believe, a Siri speaker, home speaker to take on Google Home, Amazon Echo. What does Apple bring to the market, or is it too late?
I think we're in the first inning in the home, to be honest. We're kind of like where the phone market was in 2004 and 5 when we're just scratching the surface of capabilities. There will be a lot of change. One of the things that, that Andy and I are passionate on is believing that in the long run, consumers want stuff to just work and they want to be able to buy whatever point solutions they want. So we don't think the winning model is going to be, you have to use all my stuff for it to play well together. We want to provide that horizontal layer that enables you to pick whatever you want out for your speakers, your stereo system, your TV, your lights, your front door lock, your baby monitor. Think about the long tail in the home, and it's actually a much longer tail than a mobile device market was. There's a lot of sentimental value in there and so on still to come.
That was Niccolo De Masi, Essential President and COO. Ahead of the highly anticipated release of the Tesla Model 3, the autos team at UBS got a hold of Tesla's biggest competitor, the Chevy Bolt. Not only did they buy the car, but they took it apart to give a comprehensive breakdown of the features and the cost of the vehicle. Colin Langan, analyst at UBS, discussed what they found under the hood.
We partnered here with a team we call the Evidence Lab, a bunch of data scientists, and we've talked to them about how the Chevy Bolt will be the first mass market EV with over 200-mile range, and this would be a very interesting test for EVs in the US and globally. Since this was such an important vehicle, we decided to partner with a company that is an expert in automotive teardowns and provided us a very detailed cost analysis of the entire EV powertrain, which I think gives us quite a unique edge in understanding this important phenomenon in the industry.
So give us the highlights on how the Bolt compares to the Tesla Model 3.
Well, I mean, we'll get the full details of the Model 3, but both are around the similar price point, actually. I mean, the base Tesla Model 3 will be $35,000. The Bolt with base would be more like, once you get the $7,500 credit, it's about $30,000. So similar price points. The range will be very similar. Both will be over 200 miles. So they're very interesting comparisons. Now, obviously, Tesla is going to be a little bit more upscale. So when we compare the two, we put a little more cost in the powertrain, assume that they're going to have a little bit nicer interior. Given the price point, probably is going to be more like 42, 43 with all the options, which will be closer to sort of a BMW 3 Series.
Now, you guys estimate that GM is losing $7,400 on every car. There are estimates that Tesla will be losing $2,800 on every Model 3. How do they stem these losses? How do they close that gap?
Well, I mean, the big driver here is going to be battery costs. So that's today. Also realize that we're only assuming that GM is going to sell around 30,000 Bolts a year. That's a very low number, so the R&D costs aren't really spread off over a lot of units. But the big driver going forward is going to be that their battery costs are going from over $200 per kilowatt hour today, and we estimate it'll be around $130 per kilowatt hour. So there's massive declines in battery costs are a key driver. We also assume there's certain components, and that was part of our expert analysis, that have a good step function coming down on the EV powertrain. That will also help in an above average cost decline on the EV powertrain as well. So that narrows the gap from about a $9,000 cost premium today to just a $3,000 or $4,000 premium by 2025. When you contribute that to the total cost of ownership, lower fuel, hopefully lower maintenance, the economics, particularly in Europe where gas prices are a lot higher, actually start to make a lot of sense.
So what is your projection for the growth in the EV market in general as a result of the Bolt?
Yeah, I mean, we raised our global forecast because we did find that the costs today are lower than we expected, and we do expect battery costs to accelerate. And that's, with, a lot of experts that we've talked to around the battery. So we're expecting by 2025 about 14% of vehicles globally will be EVs. So it's a very high number, I think, compared to other estimates out there. A lot of that will be driven by Europe, with about 30% penetration in Europe. In the US, we're a bit more conservative. We expect only 5% EV penetration. We really look at it with much lower gas prices. This is going to be more of a luxury vehicle. And we know, and one of the reasons why we are cautious on Tesla is that we know all the German luxury guys will be coming with their own EVs over the next 3 years in the 2018 to 2020 timeframe. And that's Mercedes, Audi, Porsche. So competition is intensifying on the luxury side.
Right. So as more companies produce electric vehicles, what does that mean for the auto industry at large?
I mean, it's going to be a very important transformation. So when you think of the automakers, the whole engine is going to be sort of overhauled here. And that's going to be a difficult and challenging transformation. At the end of the day, we do think that the return on invested capital for the automakers will actually, be very consistent with what we have today. And I think there's a very important role for the traditional automakers in the future. For the supply base, we highlight some names actually should benefit from this. So we highlighted in our report, Delphi, really has good content. Lear has good content on an EV, more content really than they have on internal combustion engines. So it really could be a positive if you're well-positioned supplier.
Any idea when Chevy will be making the car more widely available and with less of a focus on California specifically?
I don't have any official news there. I mean, I assume it'll be, ramping production like most vehicles throughout the rest of the year. It only launched in the fall.
That was Colin Langan, autos analyst at UBS. Coming up, Bitcoin has been on a tear, surging more than 100% in the last 2 months. We will discuss what's behind the move in the cryptocurrency next. This is Bloomberg. Intel has escalated the battle against rival AMD in the market for high-end personal computer processors. The company unveiled a new, more powerful chip. Intel will begin selling chips under a new Core i9 brand aimed at gamers. The company's only competition in PC processors, AMD, says its latest product has outperformed Intel chips. Bitcoin has risen more than 100% in the last 2 months, but critics say the digital currency is showing signs of a bubble. In the last week, Bitcoin hit an all-time high, only to slump back down. It is this kind of volatility that gets bears worried, not to mention questions about safety, fraud, lack of government recognition, and competition from other digital currencies. We spoke with Polychain Capital founder and CEO Olaf Carlson-Wee. Polychain is a hedge fund backed by Andreessen Horowitz and Union Square Ventures, as well as our Bloomberg editor-at-large, Corey Johnson.
We've seen really fast growth in Bitcoin recently. I think this is an uptick coming from an industry that hasn't been moving as aggressively in the public radar. But now that a lot of the growth in the price is more closely tracking the fundamentals, I think we're seeing a big uptick for that reason.
Corey, some investors have told me that Bitcoin is like gold. It is a finite resource and therefore just not as interesting. What's your take?
Well, I think gold's fascinating personally, but it is true that the way Bitcoin is constructed, it's meant to be finite. It's meant to be harder and harder to mint coins as there are more and more out there. And so the scarcity value is an important part of the Bitcoin plan and has been from the very beginning. But I think, for people in the Bitcoin community, they see all this investment, they see all this excitement, they know all these deals, they can't believe their parents don't understand what they're doing. So when they see the price surge, I think it's seen as a validation of what they've all been working on. But there's absolutely an element of gold-like, of gold bug-like, both fervent belief and rabid speculation going on here. And you can see that in the reaction to the price. And I thought you really did see that, when you showed that 5-day chart 5 days ago, when you saw that really dramatic 1 hour 20% sell-off in Bitcoin, you can really see that it is so speculative, this current wild ride that Bitcoin's on, that while the long-term value of Bitcoin may be in the eye of the beholder, the volatility is really in the eye of the speculator.
Now, I've been talking to investors who've said Bitcoin is old news. The new hot cryptocurrency is something called Ethereum. In fact, I interviewed Fred Wilson of Union Square Ventures and asked him for his prediction for the year, and he had this to say about cryptocurrency in general. Take a listen.
I think that Ethereum will bypass, the market cap of Ethereum will bypass the market cap of Bitcoin by the end of the year.
So of all the predictions he could have made about anything in tech, that is what he chose. Olaf, first of all, explain how Bitcoin and Ethereum are different.
Yeah, so Bitcoin has a programming language that you can use to interact with the protocol as a developer. It's a very limited programming language. In Ethereum, this programming language is much more expressive. And it's higher level. What this means is that for developers building applications on top of the protocol, it's actually much easier to work with. So what we've seen in Ethereum is a much richer organic developer ecosystem develop very, very quickly, which is what has driven Ethereum's price growth, which has been actually much more aggressive than Bitcoin.
So would you agree with what Fred had to say?
Yeah, I would agree with Fred.
You think the market cap is going to replace surpass?
I don't know if I would agree with as aggressive a timeline as Fred, but I think in the long term, absolutely.
How long?
I would give it maybe, I would extend that out 1 year. So maybe by the end of 2018.
Interesting. Corey, what are your thoughts?
Well, I think Ethereum is really interesting, too, in the way that it sort of uses a distributed network to embed both sort of security and ownership of Ethereum, that it's a much more like TCP/IP than it is sort of the client-server method or model. But I think, so it's fascinating from that regard, and therefore could have some really interesting different use cases, still using the general concept of blockchain. But I think that the other problem is that it's harder and harder to use Bitcoin. And one of the big issues that I think not a lot of people are talking about in the Bitcoin world are how hard it is to close a transaction. The speed of closing a transaction in Bitcoin is getting exponentially worse. And it's been happening, interestingly, coinciding with the big rise in the price. But it's just hard to do a deal on Bitcoin right now. We're showing a chart right now that shows how long it takes to get a confirmation on the Bitcoin network of a Bitcoin transaction. And it's getting slower and slower, and that may be a problem that's embedded into the actual coin itself, so that the Bitcoin can't really get out of its own way with this problem. There's been a lot of discussion of this problem for some time, well over a year in the Bitcoin community, but the fixes haven't worked. And the proposed fixes are challenging the very nature of Bitcoin. So unless a solution is found to this, I think that it's going to be a real problem, a wind in the face of Bitcoin's ascendancy, because the transactions, the deals just can't get done.
What about the safety issues here, Olaf? I mean, we just covered this big ransomware WannaCry hack attack, and the hackers were asking for ransom paid in Bitcoin because of the anonymity. Will that change?
Well, you know, I think these technologies basically offer a whole new suite of use cases that weren't possible beforehand. So that includes both good actors and bad, just like the internet itself enabled both good and bad people.
Are there any other cryptocurrencies that we should be watching?
Oh, many others. Would you like to know what they are?
Yes, I would.
So I very much like Ethereum tokens, which are built on top. These are things like Maker, Augur, Golem. I also am a pretty big fan of some of these more novel types of signatures. So this is in things like Zcash or Monero.
When do you think these are going to go mainstream? I mean, when will the average novice consumer be paying for things in Bitcoin or Ethereum tokens, whatever it is?
So I think we're absolutely still in the kind of infrastructure building phase before we're ready for user-facing applications. But I do think within 1 to 2 years, we'll start to see the first viral applications that are user-facing.
That was Polychain Capital founder and CEO Olaf Carlson-Wee and our Bloomberg editor-at-large, Corey Johnson. Coming up, Box is standing out in the crowded cloud space and generating cash in its coffers. We'll hear from CEO Aaron Levy about the company's latest earnings results and the goals ahead. And if you like Bloomberg News, check us out on the radio. You can listen on the Bloomberg Radio app, Bloomberg.com, and in the U.S. on SiriusXM. This is Bloomberg. To keep up with competitors, Microsoft is giving Skype a makeover. The new app has all the features users know while adding third-party services, simpler photo sharing, and a revamped interface for group chat. Skype has taken a back seat in recent years to the convenience of social networking applications like Snapchat and Apple's iMessage. The new Skype will be released gradually, starting out in Android devices, then on the iPhone in about a month. It was a banner quarter for cloud content management company Box. Positive earnings results helped push the stock to a 52-week high this week, and 2 analysts raised the price target on the company. Investors were particularly pleased Box maintained its goal of being cash flow positive, a big challenge for a tech firm looking to grow. We spoke with Box CEO Aaron Levy about the results and what's next for the company.
Make sure that we're plugged into the different applications that our customers are using. So if you're using Facebook for the enterprise, which is their new workplace product, we want to make sure that content can be served up securely within that environment. If you're using IBM's workflow technology, we want to ensure that we can plug in to that software very seamlessly as well. If you're using Slack for communication on Teams, we want to make sure Box can be the back-end system for that content. So really any application that gets created or used in the enterprise, we want to ensure that we have a deep integration again, to power the content management and underlying data management within that app for our customers. So partnering is fundamental to our strategy. We're very excited that over the past year, you've seen some pretty expansive partnerships with companies like Microsoft, Google, IBM, and many others, and these are very core to our strategy.
How does now being free cash flow positive impact the business?
Yeah, I think this is obviously one of the biggest concerns or questions that Wall Street had when we were first going public. We were growing very quickly, but at the same time, we were burning a lot of cash. And I think the big question was, what was this business going to look like at scale? And was there going to be a convergence point? And we told the market that Q4 of FY17, so that was January that we just kind of came through. We said we would be cash flow positive in that quarter, and we did achieve that. So that was what we had guided Wall Street to. And now for the full year for fiscal 2018, which is the year we're in right now, we also guided that we will be cash flow positive on a full year basis. And really what this means is obviously we don't have to raise outside capital anymore because we're now generating cash. We have over $200 million in the bank. So that's really positive. But I think more importantly, it shows that as we are growing still pretty rapidly with 30% growth on the top line, we are generating a very, very healthy core business model, and we have very strong and healthy economics at the foundation of the business, which obviously is incredibly important to just running our company, but also equally important to Wall Street's understanding of really what we're building.
You've been critical of President Trump, Aaron, and when he was a candidate last summer, you signed a letter along with 100 other tech leaders saying he would be a disaster for innovation. Box shares are up 30%. Has Trump been the disaster for innovation that you expected him to be?
Well, I would probably separate our business performance from some of the policies that have been enacted. I would say as it relates to tech innovation and the innovation economy, we really haven't gotten much of a clear message from this new administration about what they believe are going to be the defining factors over the next decade and coming decades to really truly driving a high innovation economy. That would range from things like high-skilled immigration, STEM education, digital policy issues like encryption reform, patent reform. So you have a lot of issues where they are still, it's still really unknown what the administration's viewpoint is on these major issues that are going to be not just fundamental to the tech sector in Silicon Valley, but really the broader economy as more and more of our economy moves into the digital age. So I think it's still very, very early, and unfortunately we haven't seen some of the policies that we'd like to see that would drive innovation forward in a much longer term picture as opposed to just the past 100 or 140 days or so.
What about climate change? What are the biggest threats to the tech industry with regard to Trump's stance on the Paris Accord?
Yeah, I think we have a real risk in things like climate change and things like immigration reform and the travel ban as it when you look at things like internet policy, where we have historically been a leader around the world in setting the tone and sending a message to the rest of the world about really what we're going to stand for, what our philosophies are going to be as a country.
That was Aaron Levy, CEO of Box. And that does it for this edition of the Best of Bloomberg Technology. We will bring you all the latest in tech throughout the week. This Wednesday, we'll sit down with Meg Whitman, Hewlett-Packard Enterprise CEO, in an exclusive interview. Tune in for that conversation, 5 p.m. New York and 2 p.m. in San Francisco. Remember, all episodes of Bloomberg Tech are now live streaming on Twitter. You can check us out at Bloomberg Tech TV weekdays. That's all for now. This is Bloomberg.